Shanghai gold sets another new record as yuan hits 16-year low versus dollar. Gold dropped back to end August levels in dollar terms Friday, and silver prices erased the last 2 weeks' gains, dropping below $23 per troy ounce as the US currency held at 6-month highs against the rest of the world's money and hit 16-year highs against the Chinese Yuan. Shanghai gold prices, the benchmark rate for bullion in gold's largest consumer market, set yet another new all-time high, rising above 467 yuan per gram as the yuan in China fell to 2007 lows against the dollar, with its more convertible, offshore version nearing its cheapest ever since launching in 2010, after the People's Bank reversed last month's strategy of raising its target exchange rate and cut its fixing level. Gold priced in dollars in contrast traded back down to $1,920 per troy ounce, unchanged from 2 weeks ago. China's massive trade surplus with the rest of the world fell harder than analysts expected in August, with exports down 8.8% per year as imports dropped 7.3% in US dollar terms. World number 3 economy Japan's GDP growth also slowed hard on the latest data, dropping from 6.0% to 4.8% annualized across April to June, with overall household spending then showing a 5.0% year-on-year drop for July. U.S. economic data, in contrast, has proven stronger this week than analysts predicted, boosting expectations that the Federal Reserve will hold if not raise borrowing costs as it seeks to halve the pace of inflation again down to its 2% per year target, boosting the dollar's exchange rate against most other major currencies. With Eurozone and especially Germany's economic data meantime pointing to recession, there is still a great deal of uncertainty over what the 20-nation European Central Bank will decide on interest rates next week, says a note from French investment bank Natixis. We are betting on a no change plus the possibility of an October hike, but if the ECB were to raise rates in next week, it could legitimately be defended. For U.S. interest rates, it's pretty clear we're restrictive, said New York Fed President John Williams to Bloomberg yesterday, but holding or raising further is still an open question as we go forward. Collectively, our forecast is that rates are going to have to remain up for some relatively extended period, said Chicago Fed CEO Austin Goolsbee to Marketplace, but rather than debating the idea of further rate rises, the argument should be more about what's the persistence. Euro gold today ended the week little changed from last Friday at €1,793, while the UK gold price headed for its highest weekend finish since early June at £1,538. Betting on this month's Fed rate decision due on Wednesday the 20th of September overwhelmingly continued to see no change on Friday, while the market-priced odds of a rate rise in November fell further from 50 to 50, with the first month likely to see a cut from today's 5.50% ceiling switching back to May from yesterday's move to June.